With so many trading styles available, there's always this dilemma, like, should I be trading short term? What exactly is an investor do? What is a swing trader? So there's so many different varieties of trading styles available. So today I'm going to decipher all of that for you and explain exactly what are these trading styles and how you should be trading. So stay tuned and let's get started. So to start this all out, let me explain to you two fundamental trading styles. So the first one is a wealth building style. And what is a wealth building style is, in its simplest terms, is you follow this approach or you follow this style to build wealth. So it's not something that you use on a daily basis. It's not something that you can generate a monthly income from, but this is something that would be for a long term to generate wealth for you and have a bigger portfolio, or you would have more wealth in the long-term perspective. Now, an income trading style is something where you would generate wealth on a shorter term basis. So this would be like a monthly income. It could be a weekly income, depending on what style do you follow in that category too. So hope that explains out the top, at least fundamental styles of trading available. Now I'll explain to you what does the wealth building style consist of. So the wealth building style consists of investing, long term time frames, which would have two categories in there. That would be trend trading style and the swing trading style. So I'll explain what those are like once we get into the details, but just as a high level, these are the trading styles available in the long term time frame. Now, in the income trading styles, you have the short term time frames. In the short term time frames, this could be trend trading, swing trading, day trading, and also scalping. So short term is something where you would try to generate wealth more frequently, so that you can then pay your bills and do a lot more with it. And long term is just like something you don't care about, and like you worry about it maybe 2 years down the line, 5 years down the line. So a lot of people do that in the terms of like putting the money into a bank, like a 5-year term where they would get some returns after 5 years. And whereas income trading style could be compared to your daily salary by working a job, and so that's like another type of style available to you for you to leverage as well. So hope that explains that out. Now a pro tip coming up for you. Now a trader should have a wealth building trade and an income producing trade at all times. So you should never just be a wealth builder and just an income producing producer, but you should have both happening at the same time. And the reason I say that is there could be a short-term trade happening that could help you get some monthly incomes coming in, but the long-term trades will help you satisfy your long-term goals and objectives as well. So you have these both together, and you're not just dependent on one or the other. Both are fueling your income sources as well. So that's why these two should be a good approach, and a lot of the professionals use this for their trading methodology as well. So now what I have in front of you is a summary table that explains all of this in one page. So the classification is you have different categories. So the ultra long term, which is people that would basically keep their money or keep a stock with them forever. And that kind of trading style is called investing. And I'll explain what investing is more in detail in a few future slides. But for now, investing is someone that keeps their money or keeps a stock for 5 years to an infinite period of time. Now, a position trader is also a long-term trading approach, which is also a wealth builder, but it's someone that would keep an average stock from 1 year to 5 years in duration. So that's like the typical duration that they like keeping it by. Now, a trend trader is someone that would keep it for the duration of a trend. So a trend could last 1 year, it could last a few months. But there are two types of traders in trend trading. So that you could be a long-term trend trader, or you could be a short-term trend trader. And a long-term trend trader would look for the long trends and basically capture the entire long trend, which could be 1 year, it could be 5 years, it could be just 1 month, and that's all that they care about. And a short-term trend trader will look for something maybe a 1 week, a few days, and that's all that they would care about. So the average holding period of time would be the duration of the trend. Similarly, a swing trader can also be long and short term, and a swing trader would also keep their money or a stock for the duration of an entire swing. So a swing could be a long swing that could last an entire year, a few years, or it could be a swing that lasts for maybe a few days or maybe a week. Now, generally, swings are shorter in duration. Like you'll never see a stock just going up for 2-3 years at a stretch. So it may go up and then fall down. And so as soon as it falls down, the swing is ended. So that's a typical short-term look at a swing trader. So the chart time frames, we've covered that in a different video, but just to give you an overall picture, these are the chart time frames that they would use as well to make their decisions in their trading approach. Now, a day trader is short term. They just buy and sell within a day, and at the end of the day, they do not keep any positions overnight, and they just like get rid of everything and start the next day fresh. And that's a typical day trader for you. Now, a scalper is someone that would keep a trade for a few seconds or maybe a few minutes, and that's all that they would keep it for. So they would be trading like a few hundreds of times in a day as well, and maybe even thousands of times depending on how much of a high frequency trader they are. So that's just like an overall style approach of that is available in trading. A lot of traders prefer, and there are like hundreds of thousands of people that are dedicated to each of these styles and only perform these styles in their day-to-day trading approach. So now let me explain to you what exactly investing is, so that we can touch on each one of these in a little more depth, so that you get a better perspective of how this is and which would be a good style for you to adopt as well. So do write that in the comments as you watch this video, so that I also get a picture and sense of like, okay, this is my trading style. I'm happy trading long term, or I prefer trading short term because that's something that I would like to generate more wealth from. So yeah, do let me know what your sense is. But for now, let's look at investing. Now, investing refers to long-term buy and hold strategies that earn returns as the investment grows. So as I explained before, you will buy and you would keep it for an infinite number of time. So you buy Apple at like, say when it was $50, and you would just like keep it on. So that's Warren Buffett's kind of style of trading, where he would hold it for decades or maybe even longer. Like he's bought trades or stocks when he started off 50 or 60 years ago, and he still holds a lot of them right now. You would also there are a lot of grandparents that own stocks, and they've transferred it down generation to generation. So that's an investing style of approach. Now, something to keep in mind is that in the recent years or the recent decades, the markets have not been the same that it was back in the day, where it would just go out for decades and decades at a stretch. The intelligent investor of today, of the 20th century, or like of 2022, you could call it, is now looking at being more active of an investor, so that he could buy and sell and not just like wait for the stock price to go back to its same buying level. So let me explain what that means very soon after I talk about position trading. So position trading as well is, by definition, is a popular long-term trading strategy that involves a trader holding a position for a period of time, ignoring minor fluctuations. So again, very similar to an investor, they keep their trades for an X number of period of time, maybe 1 year to 5 years is the average duration, but they just like holding the stocks for a long period of time. They do not really pay attention to what's happening in the market. Is the stock falling down? Maybe if it falls down an X amount of percentage, they might close their position, but they like capturing good gains. So let me explain what that is, looking at a few charts so that you get a better picture of what we are all talking about. So this is the SPX, which is just the S&P 500 index. And now this is just as an example. You could look at any stock to like try this out to know the difference between investing and normal position trading. So if I was an investor, I would have probably bought it around, say, like 1986 or 1987. Purchased 100 of S&P 500, the index ETF, and just held it, and maybe sold it, kept it for now until forever. So if I had to do that and I was an investor, I would have bought it around, like, say, 1988 and kept it till today. So if my investment in 1988 was 322, today it's worth 4,328. So if you times that by 100, that's how much of profit did I possibly make. So it is an extremely good way of generating wealth, but you don't actually generate wealth unless you sell it. Now, there are times where it may not work in your favor. Now, looking at an index, that's a different video in itself. Like looking at an index versus looking at stocks, and which is better, and what are the pros and cons of both. But yeah, looking at an index, yes, there is a lot of substantial wealth you could generate by investing long term. Now, you would only make that money once you sell it, and yes, if you to sell it, from 1989 or 1988 to today, you would have generated a substantial amount of wealth from it. Now, if you look at a position trader, so position trader would be someone that would probably buy around 1990 and like keep it for about 4 or 5 years until he sees that he needs that money now and he's like done with it, or he might buy it around like 1998 and then like sell it as soon as it goes down. So the position traders and investors don't really pay attention to the charts as much. They just buy and forget, and that's buy and hold is their general tendency of approach. So for some people that are not really so inclined into the market, that could be a possible like good form of investments for them as well. So now that we've looked at a few examples of like long-term investments, let's look at the other styles of investing as well. The next common style of investing, or trading, actually, this is more trading, is trend trading. So you've probably heard a lot about it. This is actually also my favorite style of trading. I do love trend trading, and I've done a lot of research about it. Maybe we'll talk about it in a different video. But for trend trading, by definition, what trend trading means is a trend trading is a trading style that attempts to capture gains through the analysis of an asset's momentum in a particular direction. So let me look at a chart. Let's look at a chart and see what exactly that would mean. So this is again the S&P 500 index, and this is on the weekly time frame. And if I was a trend trader, I could be a long-term or a short-term trend trader. So if I was a long-term trend trader, I would probably buy around the March of 2016, and I would hold it all the way till the trend breaks down. So I could have different ways that I would enter the trend or exit the trend based on different technical analysis patterns. But in general, I could have probably bought it around here and had sold it around 2018. So 2 years would be my long-term trend approach. If I was a short-term trend trader, I would have probably bought it around the November of 2016. And as soon as the trend breaks out, I see it falling down over here, or maybe I'll probably wait for it a little longer. So I could either trade just this particular loop. So let me just zoom in so that I'm show you what exactly I mean. I could probably trade this trend, or I could probably trade up to this trend, and then like as soon as it starts falling down, I'm out of the trend. So that could possibly be one way of looking at a trend. Let me see if I can find some more examples for you. So the recent trend that we saw here, this is from the March 2020 drop and it going all the way up. So again, in this one too, if I was a long-term trend trader, I would have probably bought it here, and I would have sold it once it crossed the moving average line over here. So like this moving average line would be my buy, and this would be my sell point. So this is a long-term trend. Now, if I was a short-term trend trader, I would have probably bought it here, and I would have sold it once it actually crossed this yellow line, which is the 20 period moving average line here. So that's a short-term trend trading. So there's two different approaches. Depending on your style, you could go for either or, but that's by like the simplest of examples what a trend trader would possibly do when he's trading his trade. Now let's look at another form of trading, which is swing trading. And by swing trading, the definition of it is it refers to a practice of trying to profit from the market swings of a minimum of 1 day or as long as several weeks. So let me explain that out with a chart, what exactly this would mean. So this is again the S&P 500 on the daily time frame. Again, the reason I'm going to the daily for swing trading is because I'm looking to capture just one swing. And a swing in general terms is of a shorter duration. It could be maybe a few days, or it could be less than a day as well. So maybe for general swing traders, they do prefer the 4-hour or a daily time frame. So let's look at a 4-hour and look at a swing. So I have a swing that's developed here from 13th of October 2021. So if I was a swing trader, I would look at buying after the moving average crosses over, and I would capture the swing here. And as soon as it starts going down, so this is where I would exit my swing, and that's capturing one swing. Now the swing in this case lasted, I would say about a week and something. And that's like a typical swing that I would capture. Another swing that I would capture here is one all the way up here, and I would sell around this point. Again, I would buy, this is one swing, and sell it out here. And this again, buy here, sell it out here. So these are swing trading approaches where they would trade maybe a few days, maybe up to a week. If I look at the 4-hour time frame, you will see like there's so many other swing approaches as well. Now this is one big swing that I would have captured on the 4-hour time frame, but it's from around the 13th of October till the 10th of November. So that's something we looked at. You could also look at, capturing this swing here and then closing it down here. So you could either hover between the 4-hour time frame or the daily time frame. But a swing is similar to a trend style of trading. But where it differs from the two is a trend would be something that is above, like say a particular moving average, and it still shows you that is in a trend direction. Now a swing differs from that in the sense that as soon as the swing ends, like a swing can just go up and go down, and that's it. That's the swing is done. Whereas a trend could still be in the upward direction, so you would not actually close it until like the trend would change direction, and they would use different styles to capture a trend. You could use a trend line, you could use a moving average, and there's a different technical analysis available to your disposal to really define how you would trade trends. So that's a different video, but just in the general and simplest terms, this is a style of swing trading that you could use in your trading. Now the next form of trading, and you probably heard about this all over the internet, is day trading. Now day trading in its simplest term refers to buying and selling of securities on the same day on the basis of small short-term price fluctuations. So let me explain what that means after looking at it. Now this is the day trading chart for S&P 500. I'm looking at the 15-minute time frame, and day traders, for example, will use anything from the 5-minute to the 15-minute to an hour or to maybe a couple hours, and that's the most that they would probably go by because you're trading intraday. You're buying and selling a few times within the day itself. So if I was a day trader, and by definition, what I'd be doing is, so for example, this is the 15-minute time frame. So I buy around this is 2:45 or 2:30 in the afternoon on the 28th of Jan, and I would probably ride it all the way up till the end of day and then probably sell it. So I could either buy this particular swing up, or I could buy the trend up. So you could use different styles in day trading depending on your trading approach. So you could use a trend trading style, you could use a swing trading style, but day trading by principle is where you buy and sell on the same day. So you could buy your and sell yours. So these two candles would be one particular buy and sell where you've captured some gains, or you could buy and sell for the entire duration of this swing up. And as soon as you see it stopping direction, or if it's end of day, this is about end of day trading day, you would sell it off here and not worry about it again. So there's different styles. Like people like buying and selling. Maybe this is another buying opportunity. You buy your and sell your within the same day itself. So you start at 10:15, you buy it around here, the low of the day, and then you sell it around 11:45. So that's another few minutes time frame. Or you might just go down to the 5-minute, and this is the 5-minute time frame. So each candle here is 5 minutes. So you would buy it around once it crosses the moving average line, buy it for a few minutes, and as soon as you see it go down, you would sell it over here. So you can use different styles of approach in your trend trading style, but by definition, it's just buy and sell very quickly within a few minutes or maybe a few hours within the day. Now, the final category that I'd like to talk to you about is called scalping, and scalping is a category within day trading itself, and these scalpers are basically people that prefer trading very short durations of time within a day itself. So by definition of a scalper is someone that prioritizes making high volumes of small profits. So they'll just keep buying and selling a few times within a day, but they'll buy massive 10,000 shares or 10,000 stocks, and they'll sell it within a few seconds or maybe a minute, and that's all that they would capture. So one of the disadvantages of scalping is that you would have very high like commissions, because every time you buy and sell you got to pay commission. So if you don't make a profit about it, your brokerage firm will get more richer than you. So that's something to keep in mind. So let's look at a chart and see what would a scalper potentially do while they place a trade. So to illustrate what this would mean for a scalper, I'm looking at the S&P 500 index on the 1 minute time frame, and some scalpers go down to the second, and that's their preferred time frame as well. So if I was a scalper and I was scalping the market right now, I would and each candle right now in front of you is 1 minute. So I would probably short sell your at this particular time candle, and I would probably like keep it down until it goes to this particular candle and then sell it, close my position. So I would probably keep my trade for 1 minute, 2 minute, 3 minute, 4 minute, 5 minutes, 6 minute. Or if I wanted to keep it a little longer, I would keep it for 8 or 9 minutes, and then that's it. I would close it out. So they would have different rules in scalping on when they would, short and then buy back, or when they would buy and when they would sell. So that's by definition is scalping. And a lot of high intensity or high frequency traders use this for their day-to-day trading approach as well. You do need a fast internet connection, because you would be trading such a high volume, and you would need a really good internet and a good strong computer to really support that as well. So I hope that explains to you everything that you needed to know, just the basics at least, on trading styles. And I hope you could pick one style. So do let me know in the comments, what is your preferred trading style? Like, do you have a particular sub style that you like to follow, or is there something that it didn't cover today? So do let me know in your comments on what would you like me to cover next as well, and I'd be happy to make a video for you. So with that, do like this video if you found anything beneficial from this, and do stay tuned for more videos that are coming up as well. So with that, take care, and I'll see you very soon.